Investing can feel overwhelming. Stocks, bonds, crypto, ETFs, where do you even start? Today, we're ranking the best beginner investing options in a tier list, from S tier, the best choices, all the way down to F tier, the things you should avoid. Whether you're brand new to money or just tired of losing to inflation, this video will give you a clear starting point. I'm ranking these based on growth potential, risk, how beginner-friendly they are, and what kind of real returns you can actually expect, not hype or internet opinions. Let's start with S tier, the best options for beginners. At the top of the list are index funds and broad ETFs. An index fund simply tracks the market, like the S&P 500 or the total stock market. This is S tier because it's diversified, meaning your risk is spread out, the fees are low, the long-term returns have historically been strong, and it's basically set-it-and-forget-it investing. If you're just starting out and you ask what one thing you should buy first, this is it. You can even start small and invest a little bit every month, and over time that consistency really compounds. Next up is a tier, great choices that should be part of almost everyone's plan. First is a high-yield savings account. It's not exciting, but this is where your emergency fund should live. You're not investing this money for growth. You're parking it somewhere safe while still earning more interest than a normal savings account. Also in A tier are retirement accounts like a 401k or an IRA. These are powerful because of the tax advantages, and if your job offers a match, that's literally free money. For most people, using these accounts is one of the smartest financial moves they can make. Now we're in B tier, good options, but with more risk or more effort required. Individual stocks go here. You can absolutely make great returns with single stocks, but they're riskier and they require research, patience, and emotional control. For beginners, this should usually be a smaller part of your portfolio, not the main focus. Also in B tier are target date funds. These automatically adjust your investments over time and are a solid choice if you want something simple and hands-off, especially for retirement. C tier is where things start to become more situational. Real estate investment trusts, or REITs, can be good for income and diversification, but you need to pay attention to fees and market cycles. They're not bad, but they're not essential for beginners either. Bonds also sit in C tier for new investors. They're great for stability and reducing risk, but they usually won't give you strong growth, especially when you're young and have a long time horizon. D tier is where we get into riskier or overhyped territory. Individual cryptocurrencies go here. Yes, some people make a lot of money, but the volatility is extreme and the downside is real. This should never be your main investment, especially as a beginner. Penny stocks are also in D tier. A low price does not mean low risk, and most beginners who chase these end up losing money. Finally, F tier, the things beginners should avoid. Forex trading sits here because the vast majority of people who try it lose money, especially without professional level experience and tools. Also in F tier are high-fee investing courses, signal groups, and paid tip communities. If someone could consistently beat the market, they wouldn't need to sell you tips. Your money is better spent actually investing, not paying for hype. So if you're brand new, here's the simple plan. First, build a small emergency fund in a high-yield savings account. Second, open a tax-advantaged account like a 401k or an IRA. Third, start buying broad index funds or ETFs consistently, even if it's a small amount. And fourth, take your time learning before you move into riskier parts of the tier list. That's the beginner investing tier list. If you want to see a crypto-only tier list, a side hustle tier list, or a retirement strategy tier list, leave a comment and let me know. And if this helped you, make sure to like and subscribe for more straightforward finance videos.